Okay, guys, we're about to jump into the juicy stuff, the entry models, exactly what I look for, putting all the pillars together, and yeah, taking our first official trade, what I look for when I want to take entries, my entry criteria, everything based on our checklist, right? So, first and foremost, let's get the checklist on the screen and get that out of the way. We've got our framework, and here you can see is our first six, well, all six pillars that I base all my trades off, right? So we're gonna start at the bottom, time and price, super important. And like I said in the previous video, that you always want to understand that you want to stick to these checklists and you want to obey them, right? You need to be a disciplined trader. Like, trust me when I say this, if you want to take your trading to the next level, you want to see yourself grow as a trader, you need to learn how to become patient, disciplined, and systematic. Those three. We need to check these things. We've got a system, and if we don't have all the checks, or even at least 50% of the checks, there's no trades. Doesn't matter if the chart or the price moves in your direction, it does not matter. Okay, so we're going to start time and price. First and foremost, I don't take a trade anytime before 8:50, right? Anything before here, I don't place a trade. I don't look at the chart. I don't even care what happens. I don't take any trade. I don't take any trade after 8 p.m. at night. Okay, so now with our time and price in, we know that this is our area which we want to take a trade in. If there's no trade here, if nothing happens here, we don't take any trades. No trades before, no trades after. Okay, now we're going to start with momentum and intent. We're going to build it. Okay, so what does momentum and intent mean? Momentum and intent means that we can see price moving in a certain direction. We want to see big volume coming through, right? So you can see, for instance, we have here massive bullish candle volume, massive bullish candle volume, massive bullish candle volume, massive. So there's clear intent and clean momentum. Like I said previously, that goes hand on hand with our structure. Where do we have our structural levels? Now, the reason why I use the Asian session and Asian range, because within this range, we create a lot of accumulation. Okay, so we can always see, and what I always do is I like to use the low of Asian range as my structural low, and I like to use the top of the Asian range as my structural high, right? For instance, here you can see this is actually the structural high. This is just the range. So this is the picture that the market is printing that we can use as a directional bias. Okay. Remember, we're on a 5-minute chart. This is where I take all my trades on. But if we zoom out, and that's why structure is so important, if we zoom out, we understand that we are respecting higher time frame structures here. Like for instance, you can see we have these lows right here, and we are creating higher lows, right? We're creating higher lows. There was some sort of a sweep in liquidity and manipulation, but we did not break the structural area and price did not continue higher. Remember, here you can see some candles closing below and you can see all of these wicks. But what did I teach you guys? That price is fractal and structure will always be relevant on the lower time frame because the higher time frames get created from these areas, right? So you can see we have these areas are still respecting structure, and that's why these key levels, high and lows from the Asian range, is so important for me. Okay, now we're going to look for supply and demand. What can we identify? So we now already are busy puzzling this whole thing together, right? We're identifying intent coming through with regards to these big bullish candles. Okay, Very, 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 very important. Now with supply and demand, how do we identify supply and demand? And now we're going to get into some detail with this, right? And we're going to look at two different areas. And I want you guys to always understand this and keep this close to your heart, right? Supply is where buyers want to get out of the market. We have our buyers building structure for us, creating patterns. Price goes into a supply. Buyers are happy to get out of their positions here because price is becoming expensive. It comes down to buy low, sell high, and sellers are now happy to step in and sell off of this area back to a certain level where buyers now agree that it's time to get into the market again, and they push price away from this area. Okay, very, 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 very important. Let me just make this a bit darker for you. Okay, very, very, very important to understand this. And this is how the markets move, guys. They move from demand areas to supply areas. Always remember, if we're looking at demand that lines up with structure, and you guys can understand just normal basic market structure, we have a high, we have a low, and we have a higher high, we have a higher low. Higher high, higher low, right? And as market shifts, we have a lower high and then a lower low. Lower high, lower low. Here you can see how the market shifts. But you must also understand that in between all of this, we still have price. If that's, for instance, a, let me just move that to the side. If that's, for instance, higher time frame structure, we still have in between structure that form with the fractal nature of price. The lower time frames create the higher time frames. Yes, it does look messy, but you must understand that price does not just always move in one legs like this. It always goes up and down within these price legs that I just drew on the screen. The best reference I can possibly give you guys here is if we refer to the fuel prices, right? Just to kind of have this understanding of how the market moves and how buyers and sellers move. If we see that price of fuel is increasing next week or next tomorrow even, what happens today? Everyone rushes in and buys fuel, right? Because of the price increase that's happening tomorrow. But next month we have price increasing again, and what happens? Everybody rushes back to go put in fuel for the price they were scared at buying last month, right? And that's what they just accept that as the norm because that is now the new best purchase price available on the market. And that's how supply and demand works. In a different context and system, you can look at luxury watches. Why are Rolexes so expensive and why are they selling so much over retail? Because you cannot get Rolexes anymore. There's no demand. Apologies, there's no supply in the market. So once the supply is cut out, the demand becomes super high because people are willing to pay premium prices for something that they want to get their hands on. And that's how the market moves, right? So for instance, if you have price moving and you see price is not pushing lower, buyers are happy to buy at this price. Big whales or whatever you want to refer to them as are getting into price. There's a lot of buyers stepping in to push price higher. And then we have liquidity grabs. Now, liquidity grabs always come in the form of wicks, right? But you must also remember we need to understand the fractal nature of price because sometimes, like for instance, what happened here, this is also a liquidity grab, right? But it's not within the moment where we are maybe looking at a trade. It's an overall bigger picture. Why do I look at this as a liquidity grab? Because we have these lows violated, but structure did not continue falling from this level. We actually did not see a continuation lower. We saw a reversal from this area. So this becomes a key structural area in the market for me. So I want to look at this area as a structural level, because this is our new higher low that formed right after we swept liquidity all the way down here, right? But an analogy that I want you guys to understand, that if we see a wick below certain key levels, lows, like you can see right here, if we see a wick like this, and we have intent, I'm going to change the color of this also, just so it's more visible for you, and we have intent in the opposite direction, price is most likely going to continue in that direction. Okay, these are little clues that the market leaves. It's not every single week, right? It needs to have clean structure, and it needs to align with what you're seeing with momentum and intent, what you see with market structure, what you're seeing with supply and demand, right? So for instance, we mark this out. You can clearly see there was a demand. How do I normally spot demands? I look for a break in certain structural areas. We have some sort of a retracement back into this key area. So here we can see we have another area of demand. Price comes back in, retests this area, and starts moving higher. What happens? We have another structural area shift and break. This area is already, in my mind, noted as a clean demand area. Okay, and then we move on and we move on. And also one key tip I want you guys to understand is we don't want to look too far to the left, right? We don't want to mark out here and say, okay, you know what? This is a supply. We're going to look at taking sells here, because there's no rule in my rule book that says we're taking sells on these highs, or price is too high, we need to sell. We are trading with the intent, and we are trading with momentum. Okay, and now for the thing on everyone's lips is, what is a CP? Let's put a CP together and let's understand what a CP is. Now, the best possible way that I can do this is to try and rely on my drawing skills. I'm going to use bullish candles as purple, and I'm going to use oh, no, I can't use that. I'm going to use this as bearish candles. Okay, so what happens is we have price showing intent in the opposite direction. Let's just look at this area right here as our area of interest. This is our demand that we want to see price reacting out of. But the CP continuation pattern was created because you don't always see a retest in a demand. But let's, for the interest sake of this video, say we got a retest off of this area of demand. So now we have two key fundamentals that we have to our disposal, right? We have, number one, we have a low in this area, and we have a high in this area, giving us a trading range. Okay, now automatically what you want to do is you want to understand that if price moves away from this area and creates structure like here, which we created this higher low, and we broke structure, went to go create a potential new high, price is bullish. And that's why you want to use this whole framework to puzzle together your logic and your trade that you want to take. And I already understand that if we have price pushing lower below this area, this demand no longer is valid, and it becomes an S&D flip zone for price to continue trading lower. As simple as that, guys. So what we now do is we look at the following. And I know it sounds silly, and I know you guys are probably laughing when I say it or every time I say it, but we want to look at this area as a slingshot, right? So what does a slingshot do? It starts in the front, you pull it back, it creates tension, and then you release it, and it creates that energy. And that's what we want to do and see in the market. So what we now want to identify, and when you see this happen, it is all eyes I don't even know if there is an emoji with eyes, and I'm just trying to really have you guys understand. I'm even just going to use this moon, right? So if you see this happen, we're starting to puzzle together our framework. We see intent in the opposite direction. We spot a demand area. We see bearish candles forming straight after bullish push, right? Now we have all eyes on this area. Why? Because we want to see if this demand holds. And the only thing we do is we take our long position, we place it right above there. Our stops will be below the low. And if price carries on and momentum and intent shows us that wants a push in that direction, we are going to be in the trade. And in this case, that is exactly what happened. We had a reaction out of that area. We got triggered into the trade and price moved away and in our direction. And this, ladies and gentlemen, is 100% the entry criteria that we are going to use. Not difficult, not overcomplicated, just easy for you to understand. So now let's get back to business and we start puzzling all of this together from the get-go. Okay, so we have here our structural low. Let me mark literally everything for you from here, from the get-go. Okay, so we have our structural levels. Okay, we have this main low, which we already identified was a low which was part of what? A liquidity sweep. Okay, that was our first initial indication. Second initial indication for me was we already respected structure and price failed to break lower. Okay, immediately after that again, and then we immediately saw we were actually busy shifting structure in this area. Okay, by identifying these key areas, I can see that we have a demand right here, which is respected, and now automatically I see intent coming through. So now I'm already eyeing and looking at all of this. Okay, my next level, which I want to see a break in, is this structural level right here. Boom, we get that structural level and we have clean candle closures above that, as you can see right here. And this area is a structural break. Now, what do we have here, which is significant? I want you guys to spot this, right? Look at how we have price pushing higher, bearish candle pushing lower, price pushing higher. This is our new area of demand. So now we're looking at this and we're seeing, okay, buyers are stepping in. Buyers are stepping in. We're starting to print and paint our picture. We still can't enter though, because we are still before my time and price. We only enter after this white line, right? So here we can see we're still pushing. Now there's clean motion of intent. Okay, now I still need some sort of a liquidity sweep. We got that liquidity sweep. So let's look into these areas and find key liquidity grab areas. Now look at what happened here. Look at how this low of this candle was manipulated right here, right? Big wick, intent in the opposite direction, and we closed above that structural high of that candle. Okay, very, very, very important. There you guys can see. Big wick, intent in the opposite direction, and we closed and structure break above that candle. And what did I tell you guys? If we see a wick, intent in the opposite direction, price is most likely going to continue in that direction. But not only did we see that, we saw a retest again out of this area of demand. Right? There was imbalance on the structural break. Look at this intent creating a shift in market, creating this imbalance. Price came back, balanced this area. After this area was already immediately balanced, showing me that this was a clean liquidity grab. So all we need to do now is we have 5 out of the 6 checks done. We need to wait for our CP. What happens? We have price pushing higher, and this is where we take out our eyes. Why are we taking out our eyes? Because we see a bearish candle followed by another bearish candle, because now we need to start looking. We need to start understanding what's happening. Because if we have price continuing from this area, pushing lower, we know we're not going to look for the buys. And this whole setup was invalidated. However, we see a massive bullish candle closure. Again, intent in the opposite direction. So I quickly come, calculate my risk, which we're going to touch in a different video. I'll put my stop loss right below the lows, and I'm targeting my risk to reward, whatever you feel comfortable with. And I'm still going to have this as a topic in another video as well for us to cover. But you can see this trade ran a total of 1:2. Well, if you go all the way to the top, 1:2, meaning if you risk $100, you would have made $200. If you risk 1,000, you would have made 2,000. If you risked, so on and so forth, 2,000, you would have made 4,000. 10,000, you would have made 20,000, right? There is our CP, the famous SMC with a twist, CP, continuation pattern. And you can see massive intent, and we're happy to hold this trade. But all eyes on just these bearish candles after we met all our entry criteria. And this is an A+ setup, guys. As you can see, literally textbook. And I hope you guys now understand the framework, the entry criteria, and how I apply this on DAX on a daily basis. Be blessed.